and welcome to the Global View on this Monday morning. It's a wonderful day to be here with you as we kick off this new trading week. I'm Nadine Blaney. So on Friday, the S&P 500 snapped a 3-week winning streak to finish down by 0.6%, while the NASDAQ broke above the 20,000 mark for the first time, advancing for the 4th straight week, while the Dow has retreated, losing close to 2%, so extending its losing run to 3 weeks. But on Friday, as you can see on your screen, stocks closed out the trading week round about unchanged in a fairly quiet session. Broadcom forecast quarterly revenue that beat expectations. It's also expecting strong demand for its custom AI chips over the next few years. And that optimistic outlook propelled the company's shares 24% higher, with its market cap heading past $1 trillion for the first time. Nvidia closed 2.3% lower. RH jumped close to 17%. It's a home furnishings retailer, and it reported higher net revenue for the third quarter. But DR Horton, which is a home builder, fell after JP Morgan downgraded it to underweight. Only consumer discretionary and communications services closed higher for the week on a sector basis. Now, Moody's unexpectedly cut France's sovereign credit rating one notch after markets closed on Saturday. The downgrade brings its rating to AA3 from AA2, with a stable outlook for future moves. It also brings that rating in line with Standard & Poor's and Fitch's. French President Emmanuel Macron named François Bayrou as his 4th prime minister this year. Now, the Federal Reserve this week is widely expected to cut rates 25 basis points to between 4.25 and 4.5%. They meet on Wednesday. Markets have almost fully priced that cut in. All eyes will be on policymakers' new economic projections, which will be released alongside the decision. Benchmark U.S. 10-year Treasury yields touched a near 3-week high. The U.S. dollar had its best weekly performance in a month. Sterling fell after a surprise contraction in UK economic activity, and the Aussie dollar slipped to near 63.6 versus the greenback. And CBA this morning saying that it could test the year lows this week. Bitcoin, though, was up by about 2% and is currently trading at $103,200. And it is a very busy week on the data docket. Rates decisions are due in the US, Japan, the UK, Norway, and Sweden. Oil prices climbed about 2% on Friday to settle at a 3-week high. Additional sanctions on Russia and Iran could tighten supplies, and lower interest rates in Europe and the US could drive demand. Gold prices fell, but that's after hitting a more than 5-week high in the previous session. Iron ore futures retreated on Friday, but did end the week higher as investors weigh up China's stimulus. The miners here locally likely to come under pressure, though, because of that move in iron ore, and we are expecting a lot of data today coming from China, including retail sales. But let's get more on what is driving markets, and let's start across the Tasman. Greg Smith from Devon Funds joins me now live from Auckland. Greg, nice to see you this morning. Look, first market in the Asian region to get up and running. What's happening there so far?
Yeah, hi Nadine, great to be here from rather wet and stormy looking Auckland, but still warm. So we've started the week lower, NZ 50 down 0.3%. We had a pretty good day on Friday, which is a bit of an outlier amongst, I suppose, regional markets. Had a few announcements this morning. We've had Contact and Meridian, so a couple of big gentailers. They provide monthly updates, so they've come through fares for November. They look sort of pretty in line. We've actually had pretty low lake levels, obviously reliant on hydro generation, and those sort of lakes have been filling back up. But storage levels looking pretty good there. With Contacts, it's around about 141% of the mean in the South Island. So we've seen a bit of pressure on wholesale electricity prices. National electricity demand a little bit softer, was warmer in November as well. And then we've also had Auckland Airport as well. So that's an interesting one, in that obviously the Auckland Council actually recently sort of sold its stake, but the tourism continues to sort of recover, and something we definitely need in terms of what our economy is sort of looking like. So international passengers are around about sort of 90% of sort of pre-COVID averages of 92%, so that's ticked up from October, which is a positive. And also domestic as well, as ticked up to around about 93% of pre-COVID. So that's pretty good for for the airport. I suppose the constraint still is facing in New Zealand in terms of a lack of aircraft and engines, maintenance sort of requirements and the like. But things sort of going on pretty there. So some 3 sort of solid updates from our large caps this morning. But the market's slightly lower on the start.
Okay, so just to be clear, so we're talking about Auckland Airport. How have shares been reacting?
So at the moment, those shares are down 1.1%. So they had a big lift in the wake of that council sale, and that was interesting. These assets, and obviously in Australia, you've had bids for a number of airport assets over there. They're becoming increasingly rare, and obviously the utility and you've got growing populations, sort of growing travel. There is a bit of capex coming with the Auckland International Airport, but really strong demand. We actually had a lot of demand from by all accounts from Australian super funds as well. So often when you get a big block for sale, as they occurred there, you might be faced with a bit of a discount, but it traded at was pitched at the previous closing price. So strong demand. That just probably weighed a little bit on the rest of the market as investors sort of repositioning. But those shares are slightly lower this morning, just over 1% down.
Okay, and look, you've got you're joining the global party. You've got some big data releases out this week. You alluded to, the slow economy there in New Zealand. What are you expecting from GDP?
Yeah, so we've got our September quarter GDP, so that's expected to confirm that the economy is in contraction. Obviously, we've had a few rate cuts already from the RBNZ, but a lot of things. There's a lot of headwinds out there. I suppose if we look at the positives, we've got another GDT print or another dairy auction this week, and that's been going pretty well. It's probably been the bright spot in the economy, along with parts of agriculture, including kiwi fruit. So similarly, I think on Friday we upgraded their forecast milk price for next year to $10. So that's a record high. So that sort of side of things is going quite well. Tourism, as I mentioned, is going along pretty nicely as well, but there's a lot of parts of the economy that are hurting. We've also got some consumer confidence and card spending data out as well, so that'll be interesting. I mean, a lot of the indications have been that people are still feeling the pinch. A lot of people haven't come off those sort of high mortgage rates yet and resetting to lower ones, so that's all creating a bit of a headwind. I suppose the other thing that's sort of also happening with our economy, and unlike Australia where you've still got very strong population growth, our migration tailwinds are really fading. So we've got record numbers of Kiwis leaving long term, and we saw that with a release on Friday in terms of net migration. Still got plenty of foreigners coming in, but the Kiwis are leaving at pace, and that's a function of the economy, a function of greener pastures elsewhere. Our unemployment rate is going up. Some other countries, including Australia, unemployment rate's going down. They can get paid more and the like. So there's not going to be a quick fix to that, but that tailwind is not going to be present to the extent it was. So that'll be relevant to those GDP numbers as well. But we're expecting the economy to have contracted in the September quarter.
And I'm sure you're in line with market expectations for a 25 basis point cut coming from the Fed.
Yes, no, absolutely. So I think that's pretty much locked in, isn't it? So that'll be a nice Christmas present for investors sort of heading into the end of the year. I mean, obviously, it doesn't really look like markets are too worried about the inflationary implications of a Trump presidency, and maybe that's one for another day. And also whether he looks to sort of exert any influence on the Fed. I mean, that's going to be fascinating next year. I see Janet Yellen sort of sounded the warning about getting involved in financial market regulation or the banking sector regulation. So that's probably a story for another day. But I think investors will take that 25 basis points. That'll be welcome. It wasn't that long ago that it was sort of looking like a bit of a 50-50 call. So and then obviously we've got the other two decisions as well from the Bank of England. So that's going to be a fascinating one as well, because inflation is printed at 2.3%. It's above the 2% target. We've got the new budget from the government there that's seen as inflationary. But as you mentioned earlier, the economy contracted in October. So manufacturing was weak. Industrial production was weak as well. So it looks like the Bank of England, they'll probably stay on hold. And then, of course, we've got the Bank of Japan, and they've been a real outlier. They've actually increased rates twice this year to try to sort of stamp out any sort of deflationary concerns. But yeah, they'll probably be on hold as well. So yeah, I think pretty much all those, we would see going to sort of consensus. But the only one you could probably think maybe do we get another cut, might be the Bank of England.
All right, and just a very quick one. Broadcom, just to pick one stock on Wall Street on Friday, I mean, really sort of reinforcing that AI narrative. That's a really hefty jump, 24% higher on the day.
Yeah, huge, isn't it? And they've done really well from acquisitions, and they're actually sort of a competitor to NVIDIA in ways. And they actually are high performance chips as well. And these are a bit more expensive on the idea that you get, but they're more efficient, you get better output, and they use up less energy, which I guess is going to be an increasing concern or thematic about AI. So yeah, where this is all going to go, it's sort of hard to tell. It's interesting that NVIDIA has actually underperformed since it entered the Dow, but yes, we've got another $1 trillion US company. And just on that note, just quickly as well, I think it's going to be fascinating to see next year where the how the sort of Trump Musk bromance goes. There's reports there that they're going to not require Tesla or companies generally to report crashes involving automated vehicles. So Tesla got a nice lift on Friday as well. So it'll be fascinating to follow that over the next sort of 6 months. And Trump was quick to sort of rebuff any idea that Musk will be conflicted. But I guess if you look at the share prices of Tesla and indeed SpaceX, investors are thinking otherwise.
Yeah, that's an interesting one there. All right, Greg, great to start the day with you. Thank you.
My pleasure.
Take
Thanks,
care.
Tony.
Just a quick check-in on what we're supposed to be seeing here when market starts trading, and that's in just a few minutes' time. We're expecting to see a drop in line with about 0.5%, so we'll see how we go. And that does it for the global view. Stick around. I'll take you through the open next.